This is Dr. Pat Human of Cirrus Research. The latest issue of The Looking Glass examines housing. The title of this report, Credit Markets Continue to Ease in the Face of a 7+% in Mortgage Rates. This is surprising, I think, to most of us, especially when we've just come from a world where mortgage rates were in the 3% ranges. And so the question is, how can the house price index, the Case-Shiller data, continue to rise? And how can the home building continue at the rate it's been? And a lot of this has to do with really the buildup in demand over the last decade or two. And as a result of some of the generational shift, some of this post-COVID world, we do think that the supply-demand imbalance is really driving this force, practically ignoring the mortgage rate hangover. This curve is important because it does two things. The bottom panel relates the reality of funding a mortgage. The rates are climbing well over 7%, but the chart and the panel above is just as critical. What this is looking at is the high yield market in home builders, building materials, and the overall high yield market. And what you'll notice really pretty much all year is that initially with the backup in credit spreads as the Fed began its tightening cycle, steadily what we've seen is that credit spreads have since moderated and rallied in. So the folks closest to the housing business, the high yield market in building materials and home builders, those spreads are rallying, which is suggesting that credit access is quite available for builders and the housing infrastructure. The report, The Looking Glass, focuses on an ETF strategy. So in this report, we walk through examples of ETFs in housing, among other key themes in the marketplace. With any questions, feel free to reach out to us. Thank you.